On a financial year basis, that is from 1st April to October 31st, 2 days ago, the Indian rupee has depreciated by 8%. Over the same period, the US dollar has appreciated by 13%. This holds true even on a calendar year basis, that is from January 1st to October 31st. During this period, the Indian rupee has depreciated by 9.8%, whereas the US dollar has appreciated by 15.8%. On a financial year basis, almost all major currencies, barring a few, like, for example, the Swiss franc, the Singapore dollar, the Russian ruble, and the Indonesian rupiah, all other major currencies have depreciated against the US dollar by levels which are much more than the depreciation which we have seen with regard to the rupee. In fact, the Indian rupee appreciated against all other major currencies, barring, of course, these currencies which I mentioned, and of course the US dollar. And the size of the Indian rupee's appreciation was indeed the highest vis-a-vis the Japanese yen. By, Japanese, when the INR's appreciation was highest vis-a-vis the Japanese yen, the Chinese yuan, the pound sterling, and even the euro. Cross-country comparisons of exchange rate movements are often made on an inflation-adjusted basis, or what is called in real effective terms. On a financial year basis, that is between March 2022 and September 2022, the Indian rupee has appreciated by 3.7% in real terms, even as the euro, the Japanese yen, and the pound sterling, and the Chinese yuan have depreciated. Thus, even in real terms, the INR is the least misaligned in the face of tsunamis of global spillovers. The story of the currency movements following the war in Ukraine, the story of that is India's currency movements following the war in Ukraine, is more about India's resilience and stability in the face of unrelenting strengthening of the US dollar rather than a story of weakness. It is important to evaluate these currency movements against the backdrop of global and domestic macroeconomic and financial developments. Since March 2020, the world has been buffeted by extraordinary and repetitive shocks. I have spoken about the pandemic, the war as two black swan events. There is yet another shock, the globalized inflation. The most recent shock has been the aggressive and synchronous monetary policy tightening, leading to the kind of turmoil which we are seeing in the financial markets. The result has been tightening of external financial conditions, capital flight from emerging markets, sharp currency depreciations, and reserve losses. No country in the world is immune to this kind of turmoil, which has followed two previous episodes of global crisis. Yet, the strength of our macroeconomic fundamentals has stood out in comparison with peers, bearing testimony to the prudent macroeconomic policies and the resilience of the buffers which we have built up. An assessment of India's innate strengths can be gauged from comparison of the state of economy today after 3 years of multiple shocks with the situation during the taper tantrum of 2013. Now, fundamental factors that drive exchange rate have moved distinctly in favor of India since 2013. In 2013, inflation in advanced economies was 1.4%, as against 10.1% in India. The inflation differential of India vis-a-vis advanced economies is now negative, a rare development with several advanced economies experiencing double-digit inflation. India's growth differential with global economy has improved from 3% in 2013 to 3.8% in 2022. The corporate sector balance sheets are strong. The banking system is well capitalized, credit growth is in double digits, and growth momentum is steadily improving. The terminal interest rate that the US Fed is targeting is anybody's guess. But it cannot be a case that the US Fed will tighten monetary policy endlessly. When the tightening is over, the tide will surely turn. capital flows to India will resume and external financing conditions will ease. In this complex world in which both push and pull factors are at play, the Indian rupee, which is market determined, should be allowed to find its level, and that is what we have been striving to ensure. As I have just explained, the Indian rupee has seen a very orderly movement since the onset of the current geopolitical crisis. We must deal with the global hurricane with confidence, and when I say we, I include everyone who is present here, all the businesses, all the stakeholders in our economy, the government and the Reserve Bank. We must deal with the global hurricane with confidence, endurance, and the courage of our conviction that we will weather this turmoil.